My condolences. I'm sorry to hear that your employer hates you, because that is the message they are sending, not only by the fact that all they're offering you is a simple IRA, which has dramatically lower contribution limits than a typical 401k, but also they have stuck you with a crappy one. You might put a little bit of effort into trying to change this plan. And the tone to take with this is that you're doing your employer a favor. You're pointing out to them that they have a lot of liability here because they have a fiduciary responsibility to one of their employees. So if they ever had a disgruntled employee, that employee could actually sue them for having such a crappy retirement plan. You don't exactly want to go, it'd be a real shame if something happened to your business here because you got sued for your simple IRA. But that's kind of what you're pointing out to them to get them thinking, maybe I ought to change this. And maybe introduce them even to some of our recommended resources. You go to whitecoatinvestor.com, recommended tab, go down to retirement accounts and HSAs, and we've got 4 or 5 people there that specialize in doing studies of what are usually small dental practices, small medical practices, partnerships, etc., and trying to help you figure out what the right retirement plan is for that practice. It might be a 401k. It might be a simple IRA. It could be a SEP IRA. It might be no plan at all. But to have them actually study the practice and figure out what the best solution is. The other thing that will help you do is even if the right plan for that practice is a simple IRA, you're not going to end up with a crappy simple IRA like the one that you have. And the reason you have this is because the person who went to set it up doesn't know what they're doing. So they went to a commissioned salesman and mistook them for a financial advisor, and they were really happy they didn't get charged any fees. And the reason why is because the participants, which likely includes the owner, who's probably the biggest participant, are paying all these huge ongoing fees as they go on. So when we designed the White Coat Investor Plan, we did not pass any of those fees on to our employees. We pay them all as a business. That's a good thing in that we can pay for them pre-tax, but it also makes it a much more attractive benefit for our employees. And here at the White Coat Investor, you can imagine our employees understand that. And so they view it as a real value, and they should. There's lots of employees out there that don't see much value in a retirement plan at all, don't understand the difference between a crummy one and a good one, and don't care. And so that's why employees can get away a lot of times with offering these crummy ones where they're actually paying all the fees. Now, assuming your employer will not change this plan, that you are stuck with it, you're only left with the dilemma of, do you use it and how do you use it? Well, do you use it? Probably, because chances are the plan will change in 2 or 3 or 5 or 10 years, or you'll go somewhere else in 2 or 3 or 5 or 10 years and can roll it over. And then you'll have more tax-protected space. You'll only pay the fees for a few short years, and you'll have more tax and asset-protected space down the road. So I'd probably still use the account unless you're like, I'm definitely going to be here for the next 30 years, and the fees are 2% plus. I'm just going to invest in taxable. Okay, fine. But for most people, you're probably still going to want to use it, even if you're constantly pushing for change to the plan. Now, what do you do with it? Well, it depends on the rest of your portfolio. If this is a tiny little piece of your portfolio, then you can, just pick one fund in there. Hopefully there's one index fund, probably an S&P 500 index fund. So you just put a portion of your U.S. stocks into that simple IRA, and you build out the rest of your asset allocation, whatever it might be, with, your Roth IRA, with any other 401ks you might have. Maybe there's a solo 401k if you do some moonlighting. Maybe there's a taxable account. But if this is like the main piece of your retirement savings, this is 90% of your money, you don't want to just invest in one asset class, even if you have to pay a little bit higher fees. So look at all of the options. Ask for access to the cheaper Fidelity funds, because Fidelity does have some dirt cheap index funds. But if you can't get them, do the best you can, muddle through, and know that it'll probably change at some point in the next few years.
The hosts of the White Coat Investor podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.